Consumers and Industry (LCCI) has called for caution with the finance bill. Its Director General, Dr. Chinyere Amona, argued that with the plan to exit some large enterprises from the Pioneer Status incentives, the government can save about 6 trillion naira tax expenditure. She said this lump sum would come from reverse exemptions and incentive grants by the government, according to the Minister of Finance, Budget and National Planning, Mrs. Zanab Samsuna Ahmed, in a 2023 budget presentation. The LCCI boss advised that living rates at their current levels would not lead to a loss of revenue. Dr. Amona said recent statistics show that the country has struggled to attract investment into the oil and gas industry. She noted that investment in the Nigerian oil and gas sector has declined significantly in the last 7 years, with operations overheads of oil and gas companies remaining above 40% above the global benchmark. The LCCI boss said, in line with federal government priorities and ongoing initiatives to incentivize gas production, several sections of the PIA clearly shows the determined efforts by the government to limit gas flaring and contain very still penalties. Dr. Amona said gas flare fees costs were treated as a penalty and as such a non-tax deductible item. She said oil and gas companies in Nigeria have reduced flaring by 70% since 2000, while nearly doubling overall gas production and commercialized volumes in 4 folds. She lamented that the oil and gas sector's contribution to gross domestic product (GDP) through 2023 was just around 5%, but incidentally, the sector accounts for over 85% of foreign exchange earnings and about 50% of total government revenue. According to her, this suggests that this sector requires a sensitive regulatory environment to avoid disruptions to investments in the sector. Furthermore, she said the industry statistics revealed that indigenous companies contribute about 30% of crude oil and 20% of the country's gas production, as well as 40% and 32% of oil gas reserves. According to her, based on feedback from operators in the oil and gas sector and the wider business community, she made some suggestions such as retention of the tertiary education tax tech rate at 2.5%, since it was just recently increased from 2.2% to 2.5%. According to her, at the proposed rate of 3%, Nigeria's corporate income tax rate would rise to about 36%, which is one of the highest rates in the world according to available research. Also, she asked the government to retain the 30% CIT for all oil and gas companies, considered amending the Petroleum Profit Tax Act with the same provision in the PIA Section 104. Others she mentioned is the need for gas flares out projects to be incentivized to ensure monetization of the resources for the benefit of Nigeria. She also recommended that finance bills are presented for extensive stakeholders consultations before they are passed by the National Assembly. She made a commitment that the chamber would continue to work towards mobilizing the private sector to support the implementation of the 2023 federal budget. On how to achieve revenue targets for the budget, she urged the MDAs and government-owned enterprises to intensify their revenue mobilization efforts in an enabling environment where the private sector strives. According to her, to achieve the laudable objectives of the 2023 budget, she urged the government to sustain current efforts towards the realization of crude oil production and export targets by creating an investment-friendly oil and gas industry. In addition, she stated that public-private partnerships (PPPs) are the best models to fast-track the pace of industrial development.